Well, Egypt's real estate sector is about 20 to 25% of the GDP. So it is probably the most important sector in the economy. And because it's such a big portion of the GDP, there's a lot of money flowing across a lot of different companies in the industry, which created a very massive opportunity for a company like Nawy to come in with a tech and digital first perspective and try to tackle the market. It was a challenge, and that was probably our first and biggest challenge at Nawy. And the way we looked at it was, with every challenge, there's opportunity, right? So if everyone's in the market doing things in a certain way that is very, I want to use the correct word here, old-fashioned or not digital or not tech-based, that creates the opportunity for Nawy to come in and say, we can do things differently, right? We can put all the available inventory on a website or an application. We can be 100% transparent. We can show everything to the customer. Now, that sounds a lot easier to do than it actually is, because you're dealing with, now we're dealing with over 300 real estate developers. A lot of them are very old fashioned. They're working off Excel sheets, off PDFs, and to be able to ingest all their data, even though the formats are different, the way they classify properties and units is very different, to be able to ingest all that data seamlessly and to put it into one unified database, that was our first challenge in Nawy. Currently we're filling a lot of gaps, but the first two that we started were creating that one platform to have all the data available. So when we launched Nawy in 2000, or what eventually became Nawy in 2016, there was no website that aggregated all the data of the real estate developers, right? If you wanted to buy from Palm Hills or Sudik, you probably had to go to their office, look at a PDF or a printed brochure. If to compare it to Sudik, you'd have to drive to Sudik's office. To compare it to Amar, you'd have to drive to Amar's office. And my co-founder, Mustafa Al-Biltegi's idea was, when buying a car, right? If I'm thinking about a car, I can go online, I can compare a BMW to a Mercedes, I can see all the specs, all their views, and make my decision, and then go down to the car dealership and pick the car I want. And real estate, in interviews, I always say, buying a house is probably the second most difficult decision anyone takes after getting married or picking their life partner, right? It's a very long-term decision. It's very costly. And if you get it wrong, then you're probably very unhappy. I don't want to say miserable, but you're probably unhappy when you make that. So why shouldn't everything be online, transparent? That was the first thing we were solving for. The second thing we were solving for was, brokers or property consultants in Egypt have a very bad reputation, right? And it starts from the cold call you get. And again, I like to joke that if I don't get more cold calls from brokers on any given day, and they call me more than my wife does, I love my wife, but they call me more than my wife does. If that doesn't happen, then something's wrong in Egypt, right? It's become part of the noise in your life, that constant cold call. So the reputation was very bad. They're always pushing you in one direction where they're earning a higher commission. They're not listening to your needs. And that was the second part, or the second ethos that Nawy was built upon. We said we're going to incentivize our property consultants equally across all projects, right? So they have no incentive to push you one way or another. They have an incentive to sell to you, of course, but they have no incentive to push you away from what your needs are. So if you go on our Facebook page, I think now we're almost at 500 reviews. 98% of them are 5 stars. And the common theme in all the comments are, this is the first time I deal with a property consultant or a broker who listened to my needs and tried to match me with the property that matched my needs rather than get pushed in a certain direction. For us, it's probably the most important part of our business, right? Even though financially, some developers may pay us 6 or 7% as a commission, and some will pay us 1%. We incentivize our people equally. If you think of it from a financial standpoint, on the short term, it makes perfect sense to push the customer towards where I'm earning 7%, right? More money for the company. But because we want to offer the right service, we therefore incentivize our property consultants correctly for them to offer the best service. And we believe that on the long run, that's what builds our brand. That's what builds trust with the customers. And that's what gives us sustainability and differentiates us from everyone else in the market. So I think we have a couple of plays in that space. As you mentioned, Nawy Now, which is our financing. And the way this came about is we looked at the market as a whole, and we realized that less than 1% of transactions in Egypt happen with a mortgage, right? Which is very unique to Egypt. If you look at the Western world or developed countries, 70 to 80% of all transactions happen with a mortgage. What that has resulted in Egypt is people end up buying primary or off-plan properties from the real estate developer because the developer offers embedded financing. But what hurts the customer is you end up buying a property, maybe payment terms over 7, 8, or 10 years, but the property gets delivered 3 or 4 years down the line. Whereas the buyer probably wants their property today. If they're buying from the developer, then they're paying installments. They might be renting another property, so they're being squeezed from both sides, right? Whereas if you go to a country like the US or the UK, people go buy an already built property, they get a 30-year mortgage, and they can start using it today. So we looked at this and said it doesn't make any sense. If you want to buy resale in Egypt, probably your only choice is to go and pay in cash, which means most people can't afford to pay 5 or 10 million or 15 million in cash. So they end up having to buy from the developer. We created our own financing solution here where you can buy a resale property with the same exact payment terms you would get from a real estate developer. That was the first angle we took. The second angle we took here was what we called Nawy shares. And this is probably my favorite product at Nawy. It's where you take a property, you split it up into different shares, depending on the property price. And the idea is to get people to own a fraction of a property for investment purposes while paying maybe £5,000 a month. What's Nawy's proposition here is we select the best properties that we believe will appreciate in price, procure those properties, sell them off to the people, and then offload or resell those properties at delivery and return the money that the investors paid plus the profits that they got. There's a lot. So we talked about financing or Nawy Now. We talked about Nawy shares, which is fractional ownership. We've also got Nawy Unlocked, which was actually an acquisition. We acquired a company that had a very brilliant business model. And their model was when you look at all these gated communities in Egypt, 50% of the properties are uninhabited. They're owned, but they're uninhabited. And the main reason that no one lives in them is the majority of these properties are delivered core and shell. So someone buys a property, let's say 5 years ago for £5 million. They pay installments over 10 years. 3 years down the line, they get delivered a property that's core and shell. Because of inflation and the change in foreign currency, the price of finishing that property now is probably more expensive than what they paid for the property. Not only that, when they're paying to finish, they have to pay it all up front, right? So they were essentially paying 5 million over 10 years. Now they have to pay 5 million immediately to finish that property. So what do? They end up just leaving the property uninhabited until they have the cash flow to do it. The second part of finishing a property is I am yet to meet someone who finished their house and came out of that experience and saying that experience was smooth, I loved it, it was beautiful, right? Most people who end up finishing their house go through an experience that ends up dragging longer than expected. The cost gets overrun. They have to compromise on the finishing because the cost is over what they expected. So the business model here was go to people who own these properties, tell them we will finish that property for you. We're willing to share up to 50% of the finishing cost. And not only that, we will then manage that property. We will rent it out for the next 5 years and we'll share the rental revenue with you for 5 years. That allows all these people who are sitting on illiquid assets to turn that illiquid asset into a revenue generating asset. So it was a brilliant business model. We ended up acquiring that company March, I think, end of March this year. And already, I think by the end of this year, it's going to be 10 to 15% of our revenues. Exactly. So for us, we're very strong on real estate. That's where our core strength is. Any opportunity we see in the market where we can add value to the customers, do something differently that no one else is doing, we're always going to take it. Whether it's profitable from day one or not, that's not really what we look at. We believe if you're adding value, then on the long run, there will always be profitability. Okay, so I think that's a very loaded question. There are many angles I can answer it from. But if I take policy in general, I think in terms of government, I really don't have any complaints. Things may occasionally move slower than what we'd like, but the way I look at it is sometimes being slow isn't necessarily a bad thing. It just means that you have to think about what you want to do and get it right. If I don't really have complaints from the government side. But in terms of real estate developers, I'd like them to be a lot more open-minded, a lot more agile in dealing with companies. At Nawy, we struggled a lot at the beginning to gather their data. They're very difficult about sharing their data and their inventory with a prop tech startup, but they were very comfortable sharing it with a brokerage. And that's kind of why we launched as both a website and an application and a brokerage at the same time, because we realized that they will share their data with the brokerage because the brokerage is selling for them. They won't share it with a listing platform. So if you have both sides of that coin, we can get the data from the brokerage and put it on the listing platform. And I think on the long run, when they start to see the volume and what's being sold, then it makes a lot more sense to them. I can't tell you how they think because I'm not them, but I think if it's not broken, don't fix it, right? So if they're working and they're selling, there's no reason for them to try to change the way they're doing things. I think it takes a lot of convincing discussions and talking, and depending on market conditions, right? So when we started, market was very hot, things were going really well, so it was much harder to get them to listen. If we look at the market today, it's a bit cooler than what we'd like it to be, so it's much easier to talk to them and get them to change their ways of doing things. Okay, so I'll start a step before that, right? As Egyptians, we love real estate. So, if we go back 7,000 years, we were building pyramids, right? And I use this in my pitch with investors. We love to build things, we love to own things. But I think that's very ingrained in our society. You still have a lot of people who say, my daughter is not going to get married and live in a rental, right? It's part of the culture. But I think the economics of it always play a role, right? So when things get tougher, we've went through a few years of very high inflation numbers, massive currency devaluations, and I think that's setting a different standard. More people will move towards rentals. It'll become more acceptable. And it is more acceptable almost everywhere else in the world, right? Most people are willing to live in a rental. It's a bit more psychologically difficult in Egypt. And that's kind of why we launched Nawy Unlocked, right? Because we saw the opportunity. We see that there will be a shift in the consumer expectations and behavior. So we kind of tried to diversify our risk in that sense. Okay, so I'll answer that in two ways, right? So Egypt is blessed in many, many ways. And I think as Egyptians living here, a lot of times we complain a lot. We love to complain, but we don't realize how blessed we are. We're blessed geographically with where we're located, right? I've been all over the world from Hawaii to the Far East. We do have some of the nicest beaches in the world, whether you're talking about the North Coast in the summer or the Red Sea during the cooler months. But we are very blessed geographically. We're blessed because of Qanat Suez. We're blessed because of our history and tourism. And I think with a few changes, which we're already starting to see, the whole game is going to change, right? So we saw Abu Dhabi come out and buy Ras Al Hikma, one of the biggest real estate transactions globally, which Egypt needed at the time for financial reasons. But if you look at the full scope of that project, it is a 30-year project, right? They didn't buy a compound. That's not what the vision here is. The vision is to build a full-time city where there will be 2 million residents living there. So it's something that's twice the size of Barcelona. Now, for that to happen, probably there's going to be over $100 million invested to get that up and running. And knowing how they operate for Emirat and seeing what they've done, they don't give up easily, right? They will continue to work at this until they rebuild a new Dubai on our north coast. We saw the same thing happen over the past couple of weeks on the Red Sea, with Amirat buying Bardo, a massive plot of land in Suma Bay to build Maresi Red. And I think there will be a few more of these projects. And on the long run, the whole landscape will change, right? Pre-COVID, Sahel or North Coast was a summer destination for Egyptians, and people would spend a month, 2 months there a year. I think that mentality is going to change with Ras Al Hikma. I think the same thing is going to change on the Red Sea. So that's when it comes to tourism and vacationing for foreigners. I think there's a lot to be done on the tourism side, but we're just very, very blessed on many, many folds here. So that's the one side of it. If I look at it from geography, strategical, economics, the other part that people miss about Egypt is I've lived in the US for 8 years, 4 years on 2 different parts of my life. Egyptians are unique because we kind of grew up in a system of overcrowding. Maybe at times there was a lack of system, lack of organizations. Egyptians are unique in their creativity and solving problems, right? And you see this in the US, right? If there's a storm and the traffic lights are down, people get to the intersection and they have no idea what to do, right? They're just stuck there because there's no green light, or it's flashing orange and they're all just looking at each other. احنا في مصر متعودين صح هو ما فيش اشاره مرور، فانا متعود لما هاجي عند التقاطع هقف هبص يمين وشمال وهعدي لو ما فيش عربيه. That built in from your youth allows you to think outside the box and allows you to create something when there's chaos, which we're very good at. And that's why you see a lot of startups come out and come up with solutions that are very unique to Egypt and make it work. I don't necessarily see it as a clash. I think there will be learning on both sides, right? They've got a model that works for them. We have another model that works for us. But I think there is a clear partnership to make this work. So there will be learning on our end, there will be learning on their end, but on the long run, it should work. I see no reason why it shouldn't work. Okay, so we did our first fundraise in 2021. It was a seed round mainly by angel investors, and that was very easy, mainly on connections. We did our Series A. We started raising our Series A in March of 2022, and that's kind of when Silicon Valley Bank went bust and the whole startup ecosystem globally collapsed. We went through a very, very painful process. One, because we weren't prepared and we didn't know how to fundraise. Two, because the conditions were really bad. So when we started, we had Silicon Valley-based VCs with very large tickets lined up, willing to put in the money. Whole ecosystem collapsed, and they all just looked at us and said, there's no way we're putting money into Egypt right now. We're going to focus on our portfolio of companies. We're going to double down, but we're not doing anything, and Egypt is way, way too risky. It took a lot of learning, but what we realized very well is when you're fundraising, you have to know the audience you're speaking to, right? So if you're talking to VCs who are afraid of a country like Egypt because of the macroeconomic risk at the time, go look at the VCs that are Africa-based, right? And if you go talk to an Africa-based VC, then they can only invest in Africa. And when you, by comparison, Egypt compared to the rest of Africa, 99%, if not all the countries in Africa, have all of Egypt's problems, probably at a 10x factor. So Egypt looks a lot more solid. And that's kind of where we managed to get our Series A in. But I think there was a lot of learning on our side. Egypt overall, again, because we live here, we like to complain a lot. We think there are a lot of problems, but on the full, if you look at the full scope, we're better off than a lot of the other companies. We've got a massive market of 108 or 110 million people, much more structured, much more organized than if you compare it to a country like Nigeria. It is a lot more stable. Maybe 2 or 3 years ago, there was a lot of macro risk, but right now, the macro economy looks very stable to me. I'm an economist by education, and I'm MIT graduate in economics, which is a top econ school. But when I look at the macro picture, Egypt looks stable for at least the next year and a half, both on foreign currency and both on the macro scale. What happens after that? Allahu A'lam. That's right now it looks stable, but you take your win and you run with it until you get there. And I'm hoping, from what I see, we've probably learned a lot of lessons from mistakes that happened in the past, and I hope we don't make them again. The one thing that I always say is for foreign investors, so we're a startup, almost all our investors are foreign investors. The number one thing that matters to them is, I'm putting money in, will I be able to get my money out? So when there were capital controls, it was very hard to look an investor in the face and tell them, give me $10 million, because they're saying, okay, I'm going to give you 10 million. Let's say Nawy becomes a unicorn that we believe it's going to be, and that 10 million is now worth 100. Will I be able to get my money out? And I can't with a straight face tell him yes, because there were capital controls. And I think that is the most important thing for any investor. If I put my money in, will I be able to get it out? And as long as he believes that he can get it out, he will continue to put more and more money in. He probably won't ever pull it out because he feels comfortable and he feels safe. The second he feels that he can't get his money in, then the FDIs dry up, right? Because he's not giving you charity, he's investing.